sins in the church. You do it in the streets. You do it at home. The rest is bullshit and you know it. Church. You do it in the streets. You do it at home. The rest is bullshit and you know it. Church. You do it in the streets. You do it at home. The rest is bullshit and you know it. You don't make up for your sins in the church. You do it in the streets. You do it at home. The rest is bullshit and you know it.
What's going on? What's up? Yeah, of course. First time back in a long time. I have lost my touch with the sound. So I'll give it a second. We'll start it up. Just need to organize some of these windows. One sec. Okay, can you guys hear me now? Oh, thanks. Yeah, she's really cute. She's grown a lot. Hey, wake up. No, she does 8. She's good to sleep for the next hour or two. Yeah, sleeping on the job. So I assume you can hear me, right? Yes, cool. Audio's good. Yeah, so it's been a while. It's been a while. Thank you. Haven't been on YouTube in a really long time. I feel like the last thing I was on was Twitch. I've been living in a cave. grew my beard out, hair's grown out. No, but it's been a while since I've been live. I want to hop on here, give you guys the time of day. Just make sure that, okay, I'm gonna move OBS. Go through the chat, say hi to everybody, and we'll start it up in a minute. Okay, what's up, Keld? What's up, buddy? Jimmy Trendricks. Pup is good. She's 15 weeks old now, I think. She's huge. She's only gonna get bigger too. She should be at about 100 pounds when she's an adult. Her mom was like 100 pounds, so. All right. Cool. X Factor. Yeah, I've been trading, but I've tried to only be on the computer from trading and get a bunch of stuff done that I need to get done outside of working, All right, Cornholio, what's up? Will Murphy, what's going on? Dave, what's going on? All right, good morning. Yo, what's up? Shaquille Oatmeal, I love that name. Yeah, of course I trade crypto in the bear market too. We went through like a little bear market period. I didn't stop trading. But yeah, I've been trading crypto since 2017. And that, obviously that implies that I've traded during the bear market. And it's not as fun. Obviously there's a lot less volatility. There's not really much that you could take advantage of like the bull market. But thanks that you I appreciate the compliment on the artwork. So I waited 2.5 months for this painting to arrive. We'll get it started in a second, but you guys know that I have to go on a tangent for a while. So I waited 2.5 months for that painting to arrive. It's you can't see it, but it goes off screen much more to the left also. It's a very big painting. 2 months, couldn't get an answer from FedEx. They were like really kind in the messages. It made it very difficult to be angry with them, but they basically tell me the same thing over and over again that, it should be on its way next week, yada, yada, yada. And yesterday, this is funny, I was actually fed up and I was like, okay, I gotta call customs. It's in Memphis. So I call customs, I'm on hold with customs, and I get a knock on the front door, and I go there, and it's the FedEx guy, and he has the painting. He's like, it's a little damaged, you want to file a claim? I can't take it back. I'm like, don't worry about it. Like, if it's damaged, at this point, I've waited fucking 2 months for it. So I open it, the whole back of the frame is smashed to pieces. It came with a frame, but it looks actually cleaner without it. Smashed to pieces. Painting was dirty as fuck all over it. So I actually had to wipe it, which was, obviously took some of the paint off. I reframed the interior myself yesterday. So I took just scrap thin wood, reframed the interior at all the fracture points, and I hung it up. So I'm just happy to have it at this point. All right. So thanks for tuning in, guys. Sorry for the absence. I did shut my Twitter DMs. I mean, I can't even describe to you how many messages I get on a given day. It makes it very difficult to keep up with messages from people that I want to keep up with. So like I wasn't on Discord for the last couple of days. I haven't been on my Telegram for the last couple of days. And I let my Twitter DMs just kind of marinate. And I go back to it, and it's a lot to take. It's a lot to handle. I mean, I grew a lot in the last couple months, and people just hit you from left and right with everything you can imagine. A lot of shilling stuff, questions that I want to be helpful with, but I'm one person, right? So if you're friends with me, you can still DM me. And for those that can't, I don't know, where there's a will, there's a way. So let's get it started though. I appreciate you guys for tuning in today. Let me turn the music down a little bit. Just as a reminder, I'm just going to go over BTC, my thoughts on the crypto market right now, just through my lens. So as I always say, none of this is to be taken as financial advice. You know that I am currently and have been sponsored with by and partners with Phemex.trade now for the last 2 years. So that should come as no surprise. So there's a link below if you want to check out that exchange. They're constantly running promotions. They've grown tremendously in the last month. And also, I've also teamed up with the guys at Perpetual Protocol, so the team at Perpetual Protocol. So if you want to check out the DEX, which I think is the best DEX, there's a link below as well. Okay, so getting into it. All right, so we have this set up. Center first. Adele. We're not listening to Adele. What are we listening to? Some hopefully non-copyright mix because I keep getting copyright warnings. All right. So that being said, thank you guys for tuning in. If you have any questions, feel free to ask them in the chat. But I want to go over BTC first. As far as this trade, what I think has been the case for the last couple weeks, and I mentioned this, and I think it's going on 2 weeks now. It's slightly under 2 weeks. I think it was on October 5th. You guys can still hear me, right? Okay, good. I just had a little bit of a worried moment because the mic audio, I constantly have to check that. So what I think has been the case is that this has been the ETF trade. Okay, plenty of desks have been on this trade. Plenty of larger participants have been on this trade as just a similar vein as every other kind of buy the rumor, sell the news type of event. All right, it's made sense to be long into what could be a positive catalyst for Bitcoin and crypto markets as a whole. You could debate whether or not spot ETF would have been better. It's a futures ETF, or the majority of the ones coming up for decision are futures ETF, but there's a lot more spot ETFs that are also coming down the pipeline for approval. That doesn't matter, right? It's a positive event. Again, puts crypto front and center, puts it on the news, right? It's an event that everybody's been waiting for. And it is a significant catalyst to be long into, all right? I think, okay, so I like to consider this, right? The Litecoin pump, which was based on the false news that Litecoin had been adopted by Walmart. I remember that was like 3-4 weeks ago now, and Bitcoin pumped, on behalf of that, right? So Litecoin pumped a lot. Bitcoin pumped, I think, around 9 to 10%. Okay, so 9 to 10%, something that is not directly Bitcoin, right? It's Litecoin. But it's obviously there's something completely backwards about that story. It was like Walmart accepting Litecoin and Bitcoin's not accepted yet, so fishy to begin with, right? But still, not directly Bitcoin, but Bitcoin benefited as a result of it. There was some beta to take advantage of there. And any kind of major adoption like that, you could say that the larger cap should benefit overall, just because it's positive for one that's that big, it's going to be positive for a lot others. Okay. So hold on one sec. Let me just get rid of this dude. Put user in timeout. So that showed, I guess, the amount of potential energy that's built up on the sidelines, right? Sidelines capital willing to just get long on anything positive. Okay, the thing about that is, one, yeah, it's not necessarily that it's just sideline capital, right? Anytime there's a major event with regards to one particular pair, other pairs will lose to that, right? Capital will come out of pairs that maybe haven't been moving as much. It's sort of a flee to quality, flee to the current beneficiary type of effect. Two, it was a surprise, right? It wasn't known, so it took the market by surprise. And the pump was definitely very indicative of that, right? This is something that has been known well in advance. So if we do get a positive outcome, just to go over my positioning, I'm long spot. Okay, I'm long spot. I've been taking I've been performing really well with swinging for the last 2 weeks, but I'm obviously trading the intraday every single day. So scalping and taking lower time frame trades. Right now, I'm not looking for any swings. Okay, I'm still exposed to spot, and I am still obviously looking to take trades throughout the day. I think that if you get an ETF approval, let's say right from the outset you get an ETF approval, I think that there will be a very significant pump. It's not going to be a surprise, right? Half of the market may be thinking that you're going to get the approval, the other half thinking you're not. But I think there will be a significant pump from people sort of having finally that celebratory moment of, aha, we finally have an ETF or some version of an ETF. Even though this is obviously, there's ETFs in Canada, there's ETFs in other countries. So waiting for the United States ETF, you will get a pump, and I think a lot of it will be fueled from capital coming from other pairs. Okay, I think that it will bring sideline capital in, but I do think there will absolutely be a very large pump. The thing about it is, I think it'll become, since it is, it's something we've known well in advance. I'm telling you, I'm still long. I've been long into this from the ideas at basically, I think it was October 5th where I was like, okay, this is clearly going to be, I said it on Twitter. I'm trying to remember exactly what I said. You could just go through the tweets. Something to the effect of, in 10 days from now or 2 weeks from now, I think on average, price will be higher than where it is today. I don't want to overthink this. I think it's a positive expectancy trade. Let me just be long into it. All right. On the basis that other people are long into it as well. Right. I'm not necessarily worried about whether or not the outcome is positive or negative 10 days into it. I'm just worried about whether or not people are going to be longing into it with me. Okay. Whether or not there's those tailwinds, and there definitely has been. So there's no arguments that you could make where you could say, well, this is, people aren't long into this. The market is reflecting a fair amount of positioning just on behalf of that outcome. So positive outcome, I think you get a very significant amount of froth come in quickly, right? So ETF, let's say, for example, they don't kick the can down the road, and on the 18th, so 4 or 5 days from now, it's approved. I think you see a very significant extension, and I think that a majority of it is going to be futures led. So I think what happens is we pump very significantly. I see people talking about 2-3% pump. I'm like, dude, the average daily range is 4%. I think we could expect something that is beyond the normal standard deviation of events, right? For just basic activity within the range. So I think we get a significant pump. I think that it sells off pretty sharply. So we have that sort of leverage wipeout, and I think what we do is we just grind up to the all-time high. The reason why I'm not going to be selling the news, and I think that this might be a little bit more actionable, is because where does that sell-off begin, right? So if we get that big sharp sell-off, right, market gets very over-leveraged, we get a ton of overextension, get that sort of clean out, wipe of OI, that could potentially happen, $10,000 above where we currently are. If you guys could see how much I'm talking with my hands right now, you'd be laughing. I have to actually remember to change the screen up a little bit. But so daily range, for example, is $2,700. All right, so 2,700 is around 4%. I think slightly under 4% of 57,000. Okay, so even a multiple of that of 2, right? Multiple of that of 3 on a significant news catalyst. I think multiple of 3, 4 you could expect. So if we have that wipe, and it doesn't occur until we get up to $67,000, and we wipe hard, it's kind of like I might be better off just holding on my position, because how are we going to wipe past? Are we going to wipe or all the way down to my where the bulk of my positioning was put on, which was again early in the first week of October. I know I'm talking about that like it's a long time ago. It's October 14th, but I think you get the idea. It's like my positioning is now. Obviously, it's well under 50K, and the average, obviously. But the bulk of my more recent addition to that is, it's much lower than where we currently are. So I think that it just makes sense to not micromanage this one too much. Hopefully, does that make sense? So if we have a positive approval, we have a ton of overextension. Yes, it does become a sell the news event, but it's probably balanced out. And that selling that comes in is probably significantly higher than where we currently are. So it's always the concept of the market's going to pull back, but dude, maybe it pulls back after it breaks up another 10K. And then, you do have that sort of extremely violent structure that's created, but I mean, it's well above where you could have gotten in anyway. So I think a common misconception is always to think of, it's like you're thinking of everything that could happen based on where price currently is. And it's like, no, by the time you ultimately come to that decision or where that does happen, we're well away from where we currently are. Okay. What's up, Magus? All right, Birdo. So does that make sense? I'll carry on after I know that that was somewhat digestible. In the event of a denial, right, let's say, there's a bit of game theory here, right? Because let's say the first one is not denied, even kicked down the road. Okay, there might be that sort of hope that's clung on to for the following potential approvals. So you could see that maybe it's not very volatile if the initial response is negative, right? So October, pro shares, for example, the 18th, negative response, whether it's a denial or just kicking the can down the road, that could be mitigated, or that volatility could be dampened just by the potential that, okay, we have in the next 5 days, we have another one coming up. If we see that, they are just one after the other sequentially is either being denied or delayed, well, then I think you're going to see a significant sell-off. And I do think that this is my catalyst I think it is the catalyst for an all-time high this year. I'm pretty, I don't romanticize Bitcoin. I try not to. So to me, it's like, all right, it's still in a range. Like, it's in a range. It hasn't made an all-time high since April. And I have to treat it like it's going to continue to respect that range unless there's some significant catalyst that leads to an imbalance move through the highs, right? Or I'm just going to expect the levels to do their job. Okay, so it makes sense. Good. All right, so as far as where we are right now, the only, where do you think we can catch news firsthand? I think that you want to be following tier 10. So Twitter accounts like DB, tier 10K, and Walter Bloomberg. Tier 10K, I think that's his handle. I mean, you'll be able to find it, right? I feel like sometimes I shouldn't have to go into too far of an explanation for figuring things out, because, you should have that sort of attention to detail or Sherlock Holmes type of character fucking quality to yourself to figure it out and find it anyway. But tier 10K, right? I don't have to go search his exact handle, like if it misses an underscore or something. I think he does a really good job of putting out breaking news. Okay, so right now, I just want to go into funding really quickly, because obviously it becomes all the rage at some points when it's heating up. I think the majority of this trending move throughout this larger range has been spot driven, so that's great. Tier 10K, thank you. I think a majority of this has been spot driven. But once price passes through, and it's just a very simple concept to understand, once price passes through like major contextual levels, it becomes obvious, right? It's like, oh, fuck, that level is like everything, bears have hinged their argument on. Now price is above it after rejecting, from it, say, for example, this fake out over here. So, okay, the underside of this structure, major contextual level, key inflection point, whatever verbiage you want to use, this arguably should lead to a breakdown continuation. If you're really that bearish, if you reaccept within this range, you're looking at what? Same sort of behavior to comfortably take place as took place before, right? We have over a 2-month long range. Okay, you accept back within this level. I'm looking at midpoint high as just an immediate within the next couple of weeks type of immediate, not within the next 24 hours target for longs at that point. So, So we had a rejection initially. Okay, so you have, at this point, a little bit more doubt coming in. Price comes back to the next major contextual level, okay, being the area where price had retested multiple times, definable range after this breakdown. Okay, so an area where you should expect to find support. No real reason to be bearish as we were returning to this level. It's a higher time frame chart. I think too many people they sort of muddy up their low time frame views and how they approach the low time frames with the high time frames as well. So now that we're back above this level, it becomes what? It becomes like extremely obvious. It's like, fuck, okay, it didn't reject it. Now we're back above the level, no problems, get a really strong daily close through. So when you have something so obvious that stands out like that, well then, of course, the dominant trade in the market is going to be to get as long as possible. So you're going to see, just consider it like this, supply and demand for borrow, right? Leverage is in demand. Increased exposure is in demand, right? It's not going to be that leverage is in demand for capital efficiency. It's going to be for increased exposure. So what happens? You're going to have that interest rate component, that financing is going to go up in price. That's completely normal, right? It doesn't mean like, funding is now positive 3 basis points. Let's sell this all the way back down to 30K, right? It's like, no, leverage is in demand. Where I think it matters is obviously when price is not continuing to move up, right? If that leverage is coming in and price is still incrementally moving up, well, that added effort coming into the market is yielding results. So right here is where it matters though. All All right, this is, of all the main points on the chart, you have your 50K handle, which is, major psychological level, big round number like that. A level that everyone can focus on, right? There's going to be a ton of participation around that point. Same thing, I said my target upon acceptance back within this range would be around 57, 58, right? That just happened to be where majority of the activity took place within it. If you sort of isolate for where most of the volume was transacted, you're looking at 57, 58. So we're at that level right now, no major rejection, but we are starting to see, longs chomp a bit more at the bit. Okay, so from a contextual risk reward standpoint, this is what? It's a better short, right? Because you have arguably, midpoint to return back down to, lows to return back down to, and 60K above that level is so clearly a long, right? So really nice area to find risk. If there's one trade, obviously you're not taking trades in a vacuum. So what is the dominant flow of the market right now? I think it's long. So do you want to get run over chancing that trade? It's defined nicely because of a very nice area you could place your stop and exit the trade. Theory, thesis invalidated, yada yada yada. But the problem is, I'm just framing this to you as to why I wouldn't want to be taking this short is, okay, so I could define my short positioning above this major level, meaning, all right, 60, let's say 61 handle, I'm out. But the truth is, I'm probably not out at 61K, right? So let's say I'm saying, okay, this is a short now, double top, really nice definable level. I'm definitely wrong for above 60. Well, definitely wrong implies that it's probably not going to be a clean exit, right? If I could say it's definitely wrong, if we're all agreeing that 60K is a huge number, it's probably that 60K leads to 65 pretty fast, right? So it's a very tight level to define. I could say 60, 61, but the truth of the matter is I'm probably not out of the trade if we break that level at 60 or 61. I'm probably out of it at 62.5, 63. So I just don't think that it's a comfortable trade that you can get out of without slipping a ton. So as far as if we're going to just cross trades off, I think, obviously you short you're not going to be prioritizing shorts, right? Market doesn't exist in a vacuum. We've had a pretty significant move. We're going into a positive catalyst right now. It just doesn't make sense, in my opinion, if there's a totem pole of trades you want to take, that one should, in my opinion, should be at the bottom. Unless you're just going to be so loose with something. I mean, you can't put a meaningful position on it. At least I'm not going to be able to put a meaningful position on it if I have a fucking 10% stop, right? So where we are right now, though, it's not from a swing standpoint. So just talking about my positioning, I'm in spot, I'm looking for intraday trades. From a swing standpoint, it's not attractive either for longs, right? Its resistance is doing its job. It could be seen as maybe consolidating against resistance. Not right now. Maybe in a couple more days of balanced activity that have a little bit of value migration up into this level. But I think right now what we're looking at is, hold on one sec, just to bring this down. I mean, you have, just to paint this out for you real quick, you have this composite. Hold on, let me change the ink. We have a composite, just slight positive drift overall. So very slightly value migrating higher. Okay, that's great. Nothing extreme though. Our balanced periods after strong trending days tend to be 2-3 days. This was into its fourth day. You have extension, strong trending day, but price recovers that, or excuse me, cleans up that entire inefficiency right there. And there was not much follow through. So you do have, again, it's a very significant level. So I'm sure plenty of people are selling this, saying I'm taking profit here. It's a good area to sell. Like I said, contextual risk reward is there. I understand it. So we have another move up that recovers again, but we're just moseying on up. Right? There's no real big move, and I think I'd rather swing higher, right? I'd rather, let's see 60K and we're at 60. Let's say we're at 60K, 65, not 65,000, 60,500. We have a strong candle through there. Looks like acceptance, ton of volume coming in, bid is firm. The first amount of selling that I see get absorbed, and you'll see it come in right away at a number like that, is probably where I'm just going to get long, right? Versus getting long here, saying that it's consolidation early. Consolidation against resistance at this point, it might look like another 2-3 days of float, right? So we might have something where we have a little bit more balance determined, maybe a little bit of drift. But right now, I don't think you have a strong case to be made for that we're consolidating against resistance, right? I think you develop a little bit further over the coming days. So from a high time frame standpoint, not ready to long that yet. It's right there though. So from a swing standpoint, I have to fucking use better language, because from a swing perp standpoint, right, not spot standpoint, 60K, most obvious level, willing to buy above there. Listen, across most markets, and I was saying this on the lead up to the all-time high when we were under 20K, across most markets, macro level returns back to all-time high are like positive EV to buy, right? Like, so if you are brewing a cup of coffee and you come back to your screens and price is like at 66, if that's me, I'm buying it, right? You know, will there be some back and forth at that level? Yeah, but it's very unlikely the price is going to break that level after this type of, you know, distribution that we've seen, and for that whole momentum to not take play again. You know, this is proving to participants across the board that this did not mean death, right? This is death, and this is, oh shit, it's still alive, right? Like, fuck. Maybe it's going to happen at 100K, but this thing is not done. So I think that those are just positive EV trades to take. So I always will, you know, when there's a very significant level like that, I typically find that there's a level before then that kind of seals the deal. And for me, I think it's 60K, right? So 60K has given me enough of a really nice opportunity to long from 60 to 65. And then honestly, I better be observing the screen at that time, because I think that this is going to be one to manage rather than to take off, right? So what that means is I'm probably going to be adding to that position, right? If it comes perfectly, I'm going to be adding to that position rather than taking profit at 65. I don't know. I think you've been here long enough, you don't take profit at the all-time high like that. Okay. Whereas I could see justification in taking profit at this prior range high, okay? Or the zone, right? Not a line in the sand. Does that make sense just as far as the high time frame goes? Just looking at the chat real quick. Cool. All right. So as far as a pullback, and it's not like, listen, funding is not hot. It's elevated, but I think that one, you have to get comfortable with, like you have to understand nuance. Like my brother is getting into trading, and it's like, of course, everybody who's interested in markets comes to me. Like as if, you know, they think that having been a trader that you could just transfer those skills and they're off to the races. It's like, nah, man, you're going to medical school right now. Like I can't just teach you these 5 things and you'll be okay. And all of them think that they'll be completely, they got it, like figured it out. Like, and everyone is so confident in themselves. You know, it's Dunning-Kruger, right? But, you know, I'm explaining the things that I think are really important. And financing is, right? Positioning is important. Positioning is not everything, because momentum takes over in this market, and easily you could see positioning begin to shift and think like that's it. So you do have to know that there are thresholds and there are spectrums of it, right? You have to develop some type of baseline. So in trending environments, like what are we talking about as baseline for funding? Well, it definitely is not going to be neutral. It's not going to be 1 basis point. You know, in a strong trending environment, we're probably talking about 5 basis points and above. Whereas like if you approach 3, if you approach 5, that's low. We're not there yet. We haven't broke the all-time high. I think that it's important to get that down, because when we do break the all-time high again, that funding is going to be elevated, and you're going to be thinking, oh my God, like every time funding has gotten elevated, it's meant the trouble is around the corner. Low time frame, yeah, but you know, it's the kind of thing you don't want to be at your computer for, because the sell-off will occur and it'll recover anyway. So where we currently are right now, though, the one thing that you are noticing, like I'm saying, is that we're still at resistance, and we are getting that aggressiveness, that eagerness for people to get long at anything that seems like a micro pullback or an opportunity to. So what I like to look at, and I've gone over this many times before, is, you know, you could look at open interest relative to highs and lows in price action, judge how much the open interest has gone up relative to price, or you could do something that does most of the homework for you, and you can look at the open interest to market cap ratio. Specifically, things to take note of are where you do have increases in funding or decreases, more towards the negative side, and you have increases that are sharp in the value that you're looking at right here. So open interest to market cap ratio is on Coinalyze. You could basically just say that this is an indication of the amount of leverage that is coming into the market. Okay, if the market cap, which is connected to price, is staying relatively stable, and open interest is beginning to increase, and there is no more sort of parity between that relationship, one is obviously accelerating much more than the other, well, then you could assume that the open interest, which is indicative of notional value, is the result of increased amount of leverage, increased amount of futures. And you don't have to think of like leverage as, the concept of leverage being used as sort of a sweeping statement for just high leverage, right? It's just leverage, right? It's like people taking their BTC, putting it on exchange for collateral or USDT collateral, and gaining increased exposure on top of capital that they have, all right? So when price does nothing, and for example, price is right here, you're getting that pullback. We had a trend day, again, cleaned up that inefficiency. You want to see after, typically in our stronger environments like we've had recently, you have a period of, let's say, bounce for, 2-3 days, extension, all right? Maybe it extends, you have two trending days, and then you have, and these are trend days, I don't know why I'm drawing it on this, and then you have a day of bounce, maybe a second day of bounce, and it's just value overlap. You notice the value is overlapping, okay? We're spending the majority of the time between the last day where value developed in the previous trend day, or where it was soaked the most. And then the extension leads to an extension again. You want to see that imbalance is leading to new prices. The business is rather willing to be done at those levels, versus having a trend day like we had, like this, and then spending a majority of the time right back within that trending day and trading back below those prices. So there is a little bit of trouble that price is obviously having, and now sitting on top of that distribution, it's sort of like we've gone from one small step to the next, retesting this micro level. It's very tight, and as that's happening, as price is pulling back, we saw funding go up, and we see that for what has been, if you take, for example, let's just take where price currently is. All right, price is flat. In that time, we've had the open interest market cap ratio go up to 250 basis points. Okay, so again, you're seeing that Bybit, you're seeing that perps across the board are consistently now trading at about a $75 premium to spot. So let's just double check that. No, it's like $20 right now. Spot premium did just show up back here, but it's like it shows up, but it's not sort of the dominant. There's no dominant presence overall. So again, it's something to be mindful of. All right, thoughts on? Yes, the trader knows he's not a doctor. Just going back through the chat. Coin margined open interest is the main culprit in the larger sell-offs that we have. Just one sec. I was actually looking to long a return back to this, but it's not leaving with the same amount of speed that I would like it to. So just for some clarity, one sec. So you see this, one sec, let me move this. These are the kind of setups that I like to take. So what you look at right here, what you're looking at right here, is I'm using a reversal chart, which when price is in these sort of microstructural ranges, gives really clean setups, right? So we might have lows being tested, prices consolidating within a very tight range, a break outside of the box. You get a ton of participation that comes into the market. Ideally, you want to see sellers trap below that low. Once we reclaim that and I see the delta begins to flip and we get more aggressiveness in the opposite direction, a lot of times I'm going to be taking scalps on behalf of that alone, especially if it's at a sort of a line in the sand that I'm focusing on. For example, taking today's lows, which were set earlier in the day, that was an attractive setup. Coming back to them right now, not so much. Again, seeing a little bit of that premium show up though too. If we're back above the daily open, then I'll definitely look to take a position off of that. Hold on one sec. There was coin margin contract. Yeah, the problem with coin margin is that there's the convexity aspect of that, right? So USDT margined. The thing about that is you don't actually have to have BTC. The thing about coin margin contracts is, though, as the value of Bitcoin goes down, the value of your margin or what you're posting as collateral is going down too, so it accelerates. So convexity looks like this. Okay, as price drops, you're losing at an accelerated rate, which is why you have to. If you're long BTC and long perps, you have to constantly rebalance if you want to gain that increased exposure. Otherwise, it's going to taper off because of convexity as well. Right? Your gains to the upside, they are decelerating when you're longing inverse swaps. All right, I'll just go through the question and then we'll just look at the low time frame. I've been using coin margined ever since breaking out of this structure. I've been using coin margined. I think the market is pretty formulaic in that, regardless of high time frame opinions, when you break back above levels that were fought over for a really long time, again, major contextual levels, there's so many ways you could say it. When you finally show acceptance through them, it's just a matter of time before you retest the next major level. When the market didn't look like it was going to continue to shit the bed, and you could assume that you'd have a good amount of time of positive activity, then I think I would always prefer to be in coin margin contracts for upside. So I've been using coin margin. Long your longs. What was I gonna say? I think I got kind of lost. I haven't done a stream in a while, so you'll have to apologize. If I listen back at this, I'll probably notice where I got lost. Okay, so high time frame covered, ETH BTC. And guys, there's a lot of stuff going on in equities right now. It's like still everyone's talking about Evergrande. People are talking about the taper. Listen. The taper is not raising rates, so those are two different animals. Fed has talked about the taper now. As I think that obviously you have to pay attention when, and I'm looking at the ES now, but when the S&P is slippery, because once the S&P gets slippery, once the equity indices as a whole get slippery, we do see it's not necessarily a contagion, but that correlation pick back up, right? Contagion, if there was some kind of major liquidity event that everyone was talking about 2 weeks ago, if that actually happened, we saw a major movement in traditional markets, everything getting hit, right? Deleveraging across the board. Contagion would be that spilling over into crypto, right? Like if you run a desk, if you have a book, and you have crypto is like your highest beta in your portfolio, like you're probably gonna try to protect your better positions within your larger allocations that are things like, for example, I'll just say let's say I have a portfolio and like I'm long Tesla, I'm long Amazon, I'm long all of FANG, And then I have like higher beta stuff like crypto and higher beta equities as well. I'm probably going to make sure that I close out the riskier shit so that I could afford to protect my, my margin positions in the stuff that I really want to make sure that is, I don't want to be fucked over on my Amazon position. I want to make sure that I get out of my risky exposure. So pull liquidity out of that. As far as ES goes right now, it's looking fine, right? So, from time to time we bring this up. It's when it gets slippery that you have to focus because, yeah, the correlation picks up and it is like tick for tick. ETH BTC. I think no matter what, with ETH BTC, you could expect a bounce in this region. So the daily and the weekly levels. So whether or not that's what we're seeing right now, and again, a lot of crypto is retail driven. It is technically driven. So, eyes on charts. When you're approaching a very significant level like this, it's attractive risk reward, right? And it being oversold now, I think that it helps that BTC is. Hold on one sec. Just getting long again. One sec. Okay. Hold on one sec. We're not on my trading screen. Ooh, just dropped below my entry because it took me a second. All right. If we could hold, I just tagged on 350K contracts. Let's see if you could. Here we go. Right at 57,382. I'll just pull out of this trade if it doesn't work. But for a second, it looked like it was getting away, and I wasn't paying attention. Trading back within today's value, right around the point of control. I would just expect that if that daily open comes, we're probably going back up. So yeah, I'm front running that a little bit, just off of the bounce that we saw. Again, good amount of sellers trapped at the low, but we'll see. I thought it was going to move a little bit faster, so I just marketed it in. Yeah, that's funny. I mean, 350K is actually, I'm kind of scalping with less lately. I've been focusing on swinging for the last couple of weeks, and that's been really paying off. My normal scalp position is anywhere from like 600K to, well, it could go up a lot further. It depends. My stop is going to be if the trade comes back below my entry. Most of the selling activity that I just pulled up the footprint earlier and I was showing you guys something. You guys can see it, I think. Most of the activity that came below that little micro range is around 57,100. So if we start trading back below that, I'm willing to give up that 200 points. So we'll see. Guys have any questions? Again, I haven't streamed in a while, so I'm a little bit rusty. Yeah, so Quant Tower, no, it's not a don't tolerate a loss. It's just for scalping, I want to be right almost immediately. Like the idea is for a lot of the trades I'm taking that are scalps, like I think that they're happening in real time and they should work out immediately, which kind of implies that it's difficult to get behind that idea with a limit. That being said, when I enter in, I want to see trade. I want it to work out almost immediately. If it doesn't, like what I am implying when I'm taking a lot of these trades is that someone is going to be in pain after price trades beyond where a good amount of that activity came into the market. And if price is able to recover a level that I think is important and doesn't get away from it quickly, then I just feel like a lot of the times it was a poor entry on my part. And if price is able to trade back below where, like, let's say, for example, we're looking at this right now and I'm talking about sellers getting absorbed. And honestly, this was kind of I took this trade pretty quickly. It's not like I was really looking at it too much. Just wanted to tag on some risk. If price trades back below that level and I'm like building a thesis around shorts being, set up and being absorbed, well, if price trades back below, then clearly they're still in the money, right? So that selling that's coming in has worked out. So there's no reason why I should say like, oh, I want to have at this point a structural stop below these lows when I could get out, $100 higher possibly. Just because at this point, daily low was swept down to it a second time, slightly higher. If we're back down here now, then I think we just end up coming further down. Let's see. I'm still using Quant Tower because I had a long back and forth with them. I know it was not my fault, but they've integrated some safeguards so that if it ever happens again, I could literally say, like, you could look at your data and see that I've had that setting disabled. So there's no, like, maybe this happened. And also there's nothing that compares to it yet that has a ladder. So there is, I'm not going to mention it now, but there's some issues that I have with this one product. And no, I'm not talking about Insilico's terminal. I love his terminal. It just doesn't have a ladder. For scalping, I have to have a ladder. So yeah, it's like the devil you do know is better than the devil you don't know. So I'm sticking with them. On this exchange that I'm trading through, I'm willing to lose that money if there's an accident. Like I doubt that the same thing would happen twice. I would hope that they have their shit together now. But if it did, it's like, well, you used it again. You asshole. You shouldn't have done that. I don't know anything about veracity. We trade back above the daily open. I think that you're targeting the daily high again. Previous daily, excuse me. I think you're targeting these highs again. But I mean, at that point, that's an initial target, right? I have my finger on the trigger after I just close this one out. I mean, it's honestly, we're trading back around that area now. There's selling coming in. I do think Insilico's terminal is great. I was supposed to do a demo for him. No, that's not who I was talking about. I wasn't talking about Insilico being the devil. I like Insilico a lot. Even I've had back and forth with him, but I've known him now for a while, and he's a good dude, and he's different. So Agar, I have the spot markets and the perps split up. So just tape speed. Anything that I don't catch on the tape, I pull up in the footprint. Right? It's like the footprint is basically working memory of the tape. I'm not. So would a good setup be to short 56.9? So break back below these lows. Yeah, I mean your initial. So the thing about why I don't why I won't look at things like they're in a vacuum and say like, oh, okay, so this is looking shitty right now. I'm probably just gonna cut it. I'm gonna cut it right now. So yeah, there's a technical trade would set up. Let's say, for example, we break below today's low. After we've had another failed auction at the highs, right? It's sort of a lackluster day. Break below today's low. Where's your next target, right? I think you have to always assume that in this environment you might get front ran. So for example, like you break below 56.9, you could just sweep this low into this little single print pocket, which is around 56.6. So sure, I mean, if you want to take that trade, that's fine. I'm just making sure that I have my template set up, so if I need to long again, that I could just do that a lot quicker. 1 sec, just give me 1 sec, guys. I just want to check something. Huh. Something's wrong with that. Oh, it's because I have my drawing tool on. It's fucking up my hotkeys. All right. Any other questions, guys? I wouldn't make fun of an SMA crossover strategy. There's a lot of them that work. Yeah, I wouldn't. I mean, there's plenty of crossover strategies that still work in crypto. When this market trends, it's a great trend following market, and you're going to be buying slightly higher above the, where price really began to take off, because the signal is going to be a bit delayed if you're using an SMA, it's just an arithmetic mean, right? It's an average. It's going to be lagging. And then obviously implying that you get out at that crossover, you're going to be getting out obviously at not the Pico top. But the thing about applying crossovers, for example, is like you have to consistently apply it every single time. Now you could really sharpen a crossover strategy and make bank. You could sharpen a crossover strategy. You could use like Heiken Ashi on top of it. Listen, there's a lot of things you could do with just a couple moving averages and 1 or 2 other modifications and capture the larger trending moves. Most people want to be more active though. Like you could tell them that they could be profitable if they only traded once a month, twice a month. If they just stuck to this one thing, they might not kill it, but they'd capture more than, they'd capture a great degree of upside, or majority of the trends, and they probably would still want to be more active than that. People get in their own way. So Farhan, I use every exchange, man. I've been in crypto since 2017. At this point, I probably said it a couple hundred times, that I have been on every exchange. I'm not going to say specifically which exchanges I use over and over again, just in case, I don't know, one of you fuckers figures out and gets me in trouble. No. I trade on all the exchanges. Any exchange that I talk about, I've traded on, probably have capital on. So ETH looks really good. And any kind of pullback to 36, I think, is worth bidding. You have that bounce from the key level. ETH USD looks good. And we've seen this kind of seesaw effect between ETH and BTC. So is it that we're going to see ETH outperform over the coming days? Okay, so here's another scenario to consider. So BTC at high time frame resistance, let's say it spends the next couple of days here, right? Consolidates against that, and ETH 2-3 days from now is now above all-time high. Okay, not all-time high, excuse me, above this local high. So we're still marching upward, not at the all-time high yet. I think that ETH would be a leading indicator of Bitcoin's activity. So even though they're in different spots in market structure, they haven't followed exactly. I think that ETH would signal that Bitcoin is going to ultimately follow. There's been that back and forth relationship now for quite some time. So if ETH starts to take over, I think you could just expect that Bitcoin will be breaking upward. So Farhan, I don't know if you missed the beginning of the stream. I'm one of the partners with Perpetual Protocol. So I don't use DYDX. So Perp I think is better. And Perp has better tokenomics as far as the token goes. So that link for the exchange is in the description below. Yeah, I love Bybit. I use, Bybit, Phemex. There's a couple exchanges I won't say that I use, put it that way. No, it doesn't get confusing at all. I've had countless wallets, countless exchanges. I mean, at this point, I've probably had, I don't even want to guess. I've probably had over, I don't know, like 20, 30 different exchange accounts. Multiple accounts. We're going back, like multiple accounts on Bittrex. Traded on what's it called? Traded on not Bitfinex, BitMEX. This is back when things were a lot looser. And no, I don't think it's not a matter of it getting confusing. I think it's smart to not have all your money on one exchange, just for counterparty risk. Even though I think we're at a point now where the leading exchanges I'm not worried about them. Burke, what's the most wrecked you've ever been? I don't know, man. I've lost 7 figures before, so. Let's see. No, I haven't. I haven't used Mango. I mean, there's a lot of ways you can tell that sellers are getting absorbed. Prices, let's say, approaching a key level. You see that perps are trading consistently lower than spot. Prices moving sideways still. Prices approaching the key level. Perps are trading again at a discount to spot. You see the negative funding beginning to increase, predicted value beginning to go more negative. You could use things like cumulative volume delta, reference, market structure in a particular area, whether or not it's, price failing to make a lower low or price making a higher low, and you have deltas not following, so delta continuing lower. So, there's nuance when it comes to that, depending on what exchanges you're looking at. Certain CVDs are just, they're very different than other exchanges. So Binance CVD is a good example. Coinbase CVD is a good example. Other things on a more atomized level, looking at a footprint chart, paying attention to the tape. It's all a matter of effort coming in to move price in one direction and not leading to any results. So if a lot of selling is coming into the market, that doesn't mean anything, right? It only means something if it's having an effect on price. If you get a ton of selling and a bunch of volume and price isn't going anywhere, well, clearly one side has the upper hand in that case. No, my account doesn't go crazy. That's why you have to use tax software. I mean, a pullback to 51 to 50, like this 50-51 handle, I would buy that. I mean, are a lot of traders are expecting that right now? I mean, I think we're coming into it again. We are. I just want to make sure I'm keeping an eye on this. That's why it's very difficult to trade and stream at the same time when you're talking. So I did a couple streams where I didn't talk and I just traded, and that was a lot easier. Trading intraday obviously requires attention to detail, or at least being able to pay attention to the chart. Right now, we're 4 days away from a potential ETF approval. So, like, let's say we're 2 approvals in and we're denied on both or delayed on both. Then, if you see market is starting to lose its footing, the next major levels are, you could say that this 53 level is significant. We haven't really swept the, so let me go to XO again. So down here around this 53 down to 52.8 single print gap. We haven't cleaned that up. You don't have to clean these things up, but it just becomes an area that I initially will look to if price is going to be breaking down, rather than just like pure TA on a daily chart and saying like, oh, we lose this level, now we're going to go all the way back down to 50. It's like, no, there's plenty of levels. There should be a speed bump between there. So I would pay attention to sweeping the entirety of that structure. Like I'd probably get long around 52.8, 52.5 if we came and dipped that low and cleaned that up back to sort of the origin of this larger trending move, which is kind of a double distribution followed by that. What is, again, a period of balance that is not as attractive in a strong trending environment. You would expect maybe 2-3 days before continuation. We've had a lot of time spent around here. But, not calling it one way or the other. If the market, again, if we get denied a couple ETFs, and it's not looking too positive and prices begin to trade lower, you have that 53 level, and then you have 50, 49.50. I think that's, I don't want to, it's, again, not financial advice, but I would be stupid to not get involved there. Like if the market does, if it's able to pull back that far. So we've seen a lot of, like a sense of urgency to get involved passively. So it's been a really strong bid. So you anticipate that in this environment that that's probably going to continue, like unless there's a catalyst for that to not continue, like a denial, right? And because of that, your pullbacks are going to be shallower. So like if you have a technical level you're looking to and everyone's looking to it, well, I don't know, maybe interpolate a little bit from there. A couple $100 or whatever framework you use to get involved earlier rather than at your level. But if the market did come all the way back down to 50, like I guess the best way I could put it is I wouldn't be worried. It still fits within what you could expect and what would be reasonable. I mean, if we look at this chart on the daily, on the weekly, not for nothing, here's your high, here's your low, here's a lower high, right? But this could be the beginning of what is going to be a larger leg, right? And that this would be the first higher low in a weekly transition. So I guess what I'm saying is, not that I want to say, like price could come back down here. And it wouldn't really be the end of the world. It would be ugly because you just, in this environment, in this market, it's sort of the concept of lower prices beget lower prices, higher prices beget higher prices. Like Bitcoin is much more valuable at a higher price, not just monetarily, but in how it's perceived. It's very reflexive. It has a tendency to really overshoot. And again, if price is back at this low, it's just going to be like, it's a fucking lower high, like double top. It's going to be difficult to overcome that selling pressure. But from a technical standpoint, like you could make a higher high between, here and here, and it would still be cool. It wouldn't be nice, right? It wouldn't be like if you had a bunch of different ones to select from, that would be the least optimal situation. Or the least desired, right? But you could come all the way back down there. Like it wouldn't be the first time we had a weekly retest of a major level, and I would buy that. Major problems, I think, and they become very obvious at this point, exist if you trade back below 40. If you're doing this, if you're back below here, I mean, I'm still going to treat it like a range, right? We're accepted back within this range. You're looking at the midpoint. You're looking at the low as foreseeable high time frame targets, but in the back of your mind, what are you thinking if you trade back below that? You're not thinking like, it's the low and we just, we could come back down here, and I'd still buy it. I could still buy this low. I think that you're much more inclined to be bearish at those points because it just looks much uglier. Single prints, naked points of control. They're just so naked points of control where price did a lot of business before. Just becomes a good area to get involved. I don't particularly think it's a good area to take positions off of, rather to get out of positions. So consider them as very friendly environments when it comes to liquidity. So it's easy to get out of positions, take profit at previous naked points of control or previous points of control. Single prints, often respected. First retest of the level, first sweep of the level, often retested. Excuse me, not often retested, often respected. Overall Bitcoin market, what role does Binance play? I mean, Binance is leading exchange by volume. I mean, as far as I don't think it's going to be. I don't think the market health is contingent on one particular exchange now. I think we see how quickly this market adjusts. I don't really like to make high time frame predictions with the macro. Macro is the one thing that everyone has an opinion on, but no one has the sort of resume to have the opinion on. It's a lot easier to predict where price will be in 1 minute than in where it'll be in 1 year. In equities, there tends to be positive drift over time. So yeah, it's easier to sort of extrapolate out like sort of linearly for where equities will be above and around maybe. It has been over time, but it doesn't mean it'll continue to be in the future. But for example, equities, let's say we're going through a period of high inflation, taper, increase in rates. I think that what you'll see is equities are good at, for example, individual companies that make up the S&P. Just what are some of them going to do? They're going to raise their prices. I'm not expecting like anything major in traditional markets. I posted something pretty recently. What did I say? Something to the effect of, let's just go find it actually. Anticipated. Oh, here we go. So popularly, I need some water. Anticipated risks don't usually materialize. So listen, there are people that have been bearish the S&P now for the last decade, and it's been in a continuous bull market. I don't really like to think about the macro too much. I'd rather adapt in real time. I don't think it's in my wheelhouse to talk about macro. If you just save $5, you can have 150K by 65. Yeah, listen. I'm not a fan of Gensler at all. I just think he's a squirrel. I love squirrels, but I don't know why that comes to mind. Just a squirrely fucking, I don't know. You know what? Lawmakers didn't really like him either. In the testimony, you could tell that no one's really a fan of him, which makes me happy. I'm probably going to wrap it up, though, shortly, guys. I haven't been on a stream in a while, so I wanted to hop on. Probably a bit all over the place. You can see that Binance has what? At $1 billion raise for DeFi for their ecosystem for Binance Smart Chain. BNB, for example, was up. How much was it up the other day? How much did we pop? Off of the lows, we're up right now, 20%, but very significant response by BNB. Kind of off the radar for a lot of people as of the last couple of months. I haven't really seen anyone talk much about it, but I don't think they're going anywhere, and I think that this is something to focus on in the near future. Not BNB in particular, but their DeFi. I think Solana looks good. Looks like you have a flag building in the high time frame. I wouldn't put it beyond this to do something like this. Pop up, little false shakeout, and then continue. But I don't think there's any reason to assume that this is done. What else? Uni showing a lot of strength yesterday. Not Uni, excuse me, DOT. I mean, again, all-time high breaks in macro assets tend to be very, very positive and just worth buying them blind. But in alts, you know, it's happened so many times before where breakout traders just get smashed. So, you know, DOT had a significant move yesterday, but it's into higher time frame resistance. You get to break above, and it's not as clear to me that I want to just be long indiscriminately DOT. I'd rather have the significant pullback to this level. We've seen so many times in alts, no real follow through in a breakout until like a week later, right? So you have a big break, market pulls back, might consolidate even, look like it's going to continue, break down, and then you get sort of that surprise candle back up. But this showing life yesterday, out of nowhere. Parachains, okay. So I think that's going to wrap it up though, guys. As far as BTC, just again to look at the low time frame, I don't think that long is going to be setting up. Again, just to reference this, one thing that I do, let me reload it again so you can see. This is the one thing that I do focus a lot on the low time frame. So price drifting down, again, spot trading at a discount. It temporarily traded at a premium in that more recent dip right here, but it's not sustained. So you want to see sustained overall, especially when you're kind of within a range, right? Price is still stuck within value. In this pullback, it looks like perps are kind of buying the dip a little bit more aggressively than I'd like. But again, that single print level around 56.5 might offer a snapback. And you can sort of see how price has transitioned from value being distributed between 58 and 57, break down, retest the underside of that structure, break up, retest. So a sweep of this low might give us our second response back within, at least back within today's range. We'll see. Nothing pops up during the stream, so. All right, guys, I'm getting out of here. Thanks for tuning in. I will try to do another one of these. What's today? Thursday? Yeah, let's try to do another one of these on Monday? Yeah, I think Monday. Until next time, have a fantastic evening.